Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. In today's Stock Market Live, we have a lot to discuss. The big question right now is, are the shorts getting squeezed or are they just setting up for another short sale? Have the bulls taken over the market or are they just doing a little bit of short covering heading into a long 3-day weekend? I don't know about you, but this has been an absolutely amazing week to trade, especially coming off of earnings. We have another trade today from Dell. I got to tell you, I haven't seen a bullish environment like this in a bearish tone where bad news is being rocketed back in the other direction. It does appear that the bulls have the upper hand right now, but is the big picture still bearish? That's what we're going to talk about right now. So is the move that's been going down basically since January of 2022 started, is it done? Is it safe to start dipping our toes in? Is it safe to start building a position? No. What we're doing right now is we are reading the tape. And as we do every single Friday, what we're going to talk about today is last night we had our coaching call. So we're going to review some of the questions from the coaching calls, some of the questions about tape reading, some of the questions about trade management, a really good question about how do we do research? How do we actually read the news? We're going to get into that in a little bit as well. And as we do every Friday, we're actually going to break down some ideas heading into next week. So we have a ton of stuff to talk about. I'm really excited because we're going to talk about the trades from this week. Ask yourself why you missed them, if you missed them, how to prepare for today. But more importantly, something that we do all the time is I don't talk about what we should have done yesterday. We want to make sure that we prep now for today and for next week. And that's a big part of trading is if this happens, then I know exactly what I plan to do and you take advantage of it. It's the traders who don't do the prep that usually get the worst entries, and then they're crying that they can't, they're always buying too late. So we have a bunch of stuff to talk about today. I'm really pumped for Friday. Stick around. Be back in just 1 second, all right? Okay, so thank you so much for joining me. I think what we're going to do is we're going to jump right into the market. That's really the first thing I want to do. And we're going to hop right on over into some earnings. So the big plays that we've actually had this week have mostly been on earnings, and Dell just knocked it out of the park right now. So futures are actually up a little bit here. Let's actually go down on a 5-minute chart. And you can see we're actually kind of topping out here. And we're actually going to do this on quite a few stocks today. We're actually going to break down reading the tape, actually. So this is where the futures are right now. If we get below this level, we now have a confirmed change of trend. And up here is actually where we are. So one of the biggest questions we get all the time is, are you watching pre-market levels? I am watching pre-market levels as long as there's significant volume. If volume is light, I don't bother with it. This is obviously a pretty big deal. So we're going to keep an eye on that right now. So 40.62 on the downside is the level we have to watch in the bigger picture. So what I thought would be kind of fun is if we break down some of the ideas in my scans that I normally watch every night. So I'm going to walk you through some of the processes so that we have actually ideas. The month is ending, right? Next Tuesday is the last day of the month. So what we want to do is we want to prep ourselves with ideas for stocks that might be coming off of the bottom that are showing bullish order flow in multiple time frames, and look for trades on the other side of the market, because while the market's exciting, especially the last 3 to 5 days, amazing ideas on the earnings side. We're going to talk about a couple of those in a second. It's still a bear market. So great traders that are prepared to make money every day, which I hope you are. Every single day, you're setting ideas up on the long side, setting ideas up on the short side. Then it's a question of using your tape reading skills to hop on board, whichever one has the best relative strength or relative weakness. Now, that sounds like a mouthful, right? It really comes down to being prepared and saying, okay, the market's really strong today, so I'm going to be a buyer. But a lot of these stocks are pushing down since January. So that's when we actually drop down to lower time frames. And I'm actually going to show you what that looks like. Okay. So just to give you a heads up, some of the questions that we got last night, I think this is probably one of the bigger ones right here, is how and when to drop down to lower time frames. And the challenge that we're having right now, you might actually be having the same challenge right now, is, again, some of the earnings stocks that we've been calling out, they've been rallying hard over 3 days. And if you're not familiar with what I'm talking about, let me just give you a little bit of a chart set up here. So we're specifically talking about, let's say, Zoom over the last 3 days. You can actually get a feel for it. This is actually where the low happened after Zoom came out with the earnings. You can see it's up 22.5% in just 3 days. 3 days. I think the biggest one that was shocking yesterday which was NVIDIA. And if you were actually watching NVIDIA the night before when earnings came out, it went all the way down to 152 after earnings got announced. It was getting pounded. And here's what it did after the fact. It went from 152 after hours all the way up to 180. So just from yesterday's low to yesterday's high was $20 and a 12% move just overnight. And then obviously we had some other ones that had big moves recently, Macy's, Dollar Tree, and Dollar General. So these are probably the biggest ones that we've been taking advantage of. But honestly, I think yesterday, NVIDIA was a big one, and AMD did not have earnings yesterday, but AMD was another big one as well. So here's the question. Here's exactly what happens. How do I take advantage of these ideas? How do I know? How do I stick to the rules where every day we talk about if the market's going down, that's the actual bias of the market, which it is right now. None of the bigger picture things have changed. What the market is doing right now is it's bouncing and following through. When the Fed minutes came out on Wednesday, it was perceived as positive news where they talked about maybe being a little bit less aggressive with how much they're going to raise for this year, which people are perceiving as bullish price action. So a lot of people are kind of dipping their toes in right now. So here's the challenge. This is really the challenge right now is, are you breaking your rules if you're buying stocks that are going up right now, if the order flow is obviously pointing to the downside? So if you're a regular viewer of the channel, this is a really big conversation that we have all the time. And by the way, if you happen to be new to the channel, if we're providing some value, make sure you click down and hit that subscribe button. So here's the challenge. Are you cheating? Are you violating your rules? Are you no longer a disciplined trader if the obvious pressure right now is to the downside, which is what a bearish market is, but you see these stocks rocketing to the upside? Should you be buying them, or are you kind of violating what good trading is? And the answer is you're not violating your rules. What you are doing is you are changing the order flow and the catalyst that you're trading. So here's the thing that I'm talking about. So if we're going straight down, or let's use the other side of the market. Let's say if we're going straight up and you have some stocks that earnings came out, were horrible, plummeting. Let's say Netflix or some of the other stocks that got hit on earnings, Snap the other day, got absolutely crushed. So we could actually take a look at those and go out on the daily chart there for a second. So let's take, maybe something like Netflix, maybe something like Snap. So these guys got absolutely crushed. So this was actually earnings over here, but then they talked about the rest of the year not being good. So what if those stocks that are clearly pushing down, all of a sudden during the day, bam, there's nothing but buying going on in those stocks? How do you take advantage of that without feeling like you're no longer, I forgot what hair on my got some hair on my shirt, my cat hair. So here's the thing, and this was actually a question from our coaching call last night, which is you need to adjust which order flow matters. So basically what we talk about is multiple time frames. So we're looking at charts and we are breaking it down. One of the most primary ways of setting up your charts is looking at whether or not you're looking at monthly, weekly, and daily. You could be looking at weekly, daily, and 60-minute. And here's where this comes from. A lot of people ask us, they reach out to our customer support and they say, what time frames do you watch? It's not a question of what time frames I watch. It's a question of, are you a day trader or a swing trader? And what is your objective for the trade? Are you looking for the next push? Then you can take advantage of all of these earnings plays, so to speak, such as NVIDIA yesterday, $20 move from low to high. So the question is, how do you take advantage of that? Well, the way that professional traders generally do that, and you can see I don't have any fancy indicators on my charts. I really just have volume and a couple of moving averages. How do you take advantage of that? And it really comes down to knowing how long you plan on being in the trade. So if you want to write this down, this is probably a pretty good lesson. You have your entry time frame, and then generally speaking, you have two time frames above that. So we're talking about now on these vicious moves to the upside. Let's work it into NVIDIA from yesterday. Okay, so let's go to NVIDIA and we'll take advantage of the intraday price action. So if we're looking at the intraday price action, and that's generally speaking the day trading time frame, then we want to go to two time frames higher than that. So right now that would be breaking it down to the this chart would be the 15-minute chart, and then this chart would be the hourly chart. So what we'd be looking at here and monitoring is, are the time frames in the immediate higher time frame than our entry showing bullish order flow? So remember what the idea of order flow is. First, you identify the dominant trend, the dominant buying or selling pressure. You always want to be able to look at a chart and say, is it obvious? And by the way, that's really where most money is lost. Most money is lost when it's not obvious and you place a trade anyway. The reason that professional traders, and hopefully you're going to be a professional trader, is you have conviction is because you're just piggybacking what's obvious in the first place. That's a big part of trading. Too many traders first put a trade on and then hope it moves in their favor. You should want it to be obvious first, knowing what time frame you're watching, how long you plan to hold the trade. So if we're looking at the bigger picture here in NVIDIA, I'm just going to pull it up on this chart over here. We've had multiple weeks of selling, You can see this. Bearish U-turn, 1, 2, 3, 4, 5, 6, 7, 8 weeks of selling prior to the earnings that came out yesterday. You can see we're up just slightly yesterday. So are we looking at higher time frame bullish order flow? The answer is no, but we have the earnings catalyst. And I just gave you a list of probably like 6 or 7 stocks that we've been trading earnings catalyst. So that means now you as a trader need to adapt. You say, I want to take advantage of this. The buying pressure is dramatic, but I need to adjust the order flow that I'm watching to validate taking advantage of these ideas. So I'm just going to give it again. I'm going to give you the screen. If you want to take a screenshot of it, you can take a look. And this is basically the one that we would be using if we were just on the day trading side of things right now. So you can see throughout the day, it really has never pulled back. You can see just using simple moving averages. And what's exciting about this, and hopefully if you're with us often, which I hope you are every time we do a live stream, is a big part of what we do is a push and a pause, right? So we actually get some questions about, I can't find any good entries. You have to know what you're looking for in order to find it, because if you're looking for everything or if you're just chasing price, you're always going to be late or you're going to miss ideas. So what we just talked about is in this bearish environment is to be looking for different time frames to take advantage of that catalyst. But then once you know the time frames, then you need to know what the entries are. So if you keep in mind, everything we talk about is a push and a pause, a push and a pause. We make money on the push, we manage risk on the pause, and that's how we look for our next entry. So for everybody who said they couldn't find an idea yesterday, especially in NVIDIA, we had a push and a pause, 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 and another push. And then the rest of the day in the afternoon, the market just slowed down. So we had 1, 2, 3, 4, 5, 6 potential opportunities yesterday in NVIDIA just coming off of the earnings. Now, I can hear what you're thinking, like, well, the earnings were not good. That's why you went all the way down to 152. This is where you separate yourself from, I'm reading the order flow and I understand everything I just showed you, but you're still not clear on whether or not you should be buying it right now. And that's where tape reading comes in. The definition of tape reading, the way that we have it in our community, is we're building an argument, putting as many pieces into that equation as possible so that we can justify risk. Okay. But one part of that, the tape reading part of it, which is the definition, is price getting closer to or further away what we call the line in the sand. Now, normally people will read the tape based on their entry price. If you want to up level your skill, reading the tape happens before you get into the trade. So once you understand stacking the order flow, and then you have a number that matters. It could be the opening price. It could be yesterday's close. It could be a moving average. Whatever it is, you have to use the same one all the time. And we use a very specific one inside of our community, and we use that same specific one in multiple time frames. This is an important statement. Once you understand what to look for, you're never lost again, because now the only thing you're looking for is that. If you see it, you read the tape, you read the order flow, you put a trade on. If what you're looking for does not unfold, you just take a step back and you leave it alone, which actually takes us into one of our questions from yesterday. So we get over here, and I want to hop on right over, where is it? Here. This is the big one that I want to talk about. How to instantly stop taking trades you shouldn't. So the first thing that we have to identify is what types of trades should you not take. The very first thing, obviously, is identifying whether or not you can make it clear, are we in a buying environment right now or a selling environment? And whether or not you're a day trader, a swing trader, or investor, it doesn't make a difference. Here's the key, and this is something you want to write down. I think, and again, I think all of us can do it. We can all raise our hand and say there's been plenty of ideas that I take that they're just not the smartest trades in the world. Like, it blips a little bit and you're like, oh, I got to get in. I got to be afraid. But you know, deep down in your soul, you're like, it's just a trade you're taking that's kind of spur of the moment. And the question that we had last night was, how do I stop doing that? And I'm just going to tell you straight up, you have to acknowledge that those trades that do not meet your edge, those trades you did not plan out, those trades are the reason you're not getting paid. Now, you're on the call right now. It's some people watching this on the replay. Some people are going to be watching this live. You're watching this because you want to improve your results. You're watching this because you want to see your trading account go like this. You want to see it steadily go up. Doesn't matter if you're day trading or swing trading, but there's something that's holding you back. There's something blocking where you want to get to. Now, I'm going to assume that maybe you already know about technical analysis. You probably understand chart reading and earnings and those kind of things and which kind of ideas you should be in. But knowing which kind of ideas you should be in and making money are not the same thing. So there's two things that you need to overcome. And these are why we have these coaching calls. We have multiple coaching calls per week, plus we have a swing trading session every Sunday morning. And if you want to learn about these, our next boot camp actually starts next week. You can click the link down below the video. The reason we need constant and never-ending improvement is because you get off track and you got to come back. You get off track and you come back. And as you start to have the right mindset of understanding those trades that you should not take in the first place, if they're the reason you're not getting paid because you're throwing in all these garbage small losses, and then when the market's obvious you're making money, you're like, I know everything, but I can't make a dime. It's because of those trades. So you have to ask yourself, what is the cost of taking those trades that I should not be taking? Which now takes us into the trade ideas for today and determining whether or not we are reversing into a longer-term bull market where that was the bottom, and maybe 2 months from now we'd be like, wow, that was a great time to buy. Or is this simply a bear market relief rally where the short sellers are going to come back down? Okay, so we're actually going to go through the stocks in the S&P 500, and we're going to do a little bit of chart work on those to come up with some ideas. But first, and I'm telling you right now, so I give you a chance, I want you to screenshot what I'm about to show you because these are the ideas that I'm looking at going into today. Okay, so I'm going to give you that screenshot, which is here. So obviously, you know, if you're a regular viewer of the channel, we track sector rotation over the week. And you can see heading into Monday, it was kind of mixed. But then Tuesday unfolded, and we started to see a bunch of stocks showing bullish order flow. Now, in our community, one of the things that I pointed out in the community is when I was doing my scans at night, while we were still going down, this is just an observation, but these are some of the things you need to notice. I said a lot of stocks are meeting bullish criteria right now, despite the fact that the bigger picture is bearish. So I didn't start buying yet, unless it was one of those earnings plays, but these are the things you notice. And if you don't do your game planning, you don't see these kind of things. So let me reverse that. That's a couple of double negatives. If you want to have absolute conviction in your trading ideas, but you see a trading like, I'm taking it because I did the game planning, I did my research, I did everything I'm supposed to, you have to put in a half an hour, you have to put in an hour, whatever time you can devote to it. If you are simply reading Reddit or running a random scan or whatever it happens to be, it's not enough. My game planning process is 90 minutes every day, which is why when the market opens, I expect to make money. Now, does that mean that I make money every day? No, absolutely not. I have some good ideas that I put on, I love, but they don't pan themselves out. But that's not the point. The point is over the month is what I'm looking for, which is what I want to talk about now. We want to talk about some ideas heading into the end of this month, but more importantly, setting us up for trades for June. All right, so we've got the long holiday coming up. So what I'm going to walk you through now is my scanner. Okay, so first thing, we saw the rotation as the week was unfolding. So you can see the green didn't quite catch a bid. And then Thursday unfolded after the Fed announcement. So this is heading into Thursday after the Fed minutes, right? And then yesterday into today where the bid just absolutely held the bid. Okay. All right. So what does that mean? What does that mean right now? And how does that translate into some ideas? So what we're going to walk through now, this list of stocks is the list of 250 stocks that meet the minimum criteria that I'm looking for. And then I kind of drill these stocks down even further. So I'm going to walk you through a couple of ideas. You might have to watch the video more than once, maybe take a screenshot of the video. I want to give you some ideas that were strong now so that we can look for that follow through to carry through. So what the big mistake people make is I want to catch the bottom. Don't bother catching the bottom. Catch the stocks that are already going in that direction, piggyback. And if those other stocks finally catch up, then you can take a look at them. So the criteria that we're talking about right now is here. So out of this big list of stocks, we're looking at stocks that are positive for the month of May. And then we're going to look at the percentage of the push. So this one here is the monthly, this is the weekly, and this is the daily. So you can see that I'm looking at multiple time frames. And a big thing I want to point out here as well, which is probably one of the biggest surprises for people that come through our community, is keep it simple. I only have volume and moving averages. That's it. And candlesticks, obviously. I don't want to think too hard. When I'm reading the tape, I want to say, can I make a definitive answer to the question, who's in charge right now, bulls or bears, buyers or sellers, and how long have they been doing it? So again, I want you to be able to take a screenshot of this, because this list of stocks on the left-hand side are the strongest stocks, not from a dollar amount. We're going to look at dollar amount as well, from a percentage gain from the opening trade on May. So whatever the first day of May was, the opening trade of May till now, not from the previous month, from May. So these will have bigger green candles for this month. Okay. So as we go through the list, you can see ARRY having the biggest percentage move. So this is why we do percentages, because if we go over here to the month, if you take a look at this list over here, if we do it simply by the month, you can see that the list changed dramatically, because this is the dollar amount and this is the percentage amount. So if we start going through this list, there might be some stocks that you have not. Look at the size of that percentage move, 45% since the start of the month. And not only is it 45% since the start of the month, but now you can see, as we go back to what we talked about before, we are seeing buying pressure in multiple time frames. So I guess a quick question here is, right, what time frames are we talking about right now? We talked about, are you a day trader, a swing trader, an investor? The ideas that I'm giving you right now for the current move off the lows, these are swing trading ideas, because we're going to the higher time frames to monitor the order flow, which is different from what we looked at before. We were talking about the hourly, the 15-minute, and the 5-minute, which was taking advantage of the short-term earnings catalyst and that buying opportunity. So again, which time frame are we watching depends on what is the objective of the trade. Do I plan on holding it for an hour as a day trader, or do I plan on holding it for 3 weeks, which on the bullish side of things has been tough since January, or if it's a longer position, which may be what we call a position trade between earnings, or as an investment. I think Jason Hammonds is here this morning. I know he's a little bit more longer term, does a little bit more data analysis. So I want to be clear, the charts that we're looking at right now are for swing trades, okay? So I want you to take a snapshot of this. You can have the list of stocks here. So what you're seeing here is the percentage gained on the monthly chart. So now the next thing, if you happen to go back through this video, you want to take a look at these lists again, and you want to go a little bit deeper and say, okay, there's buying during May, but from 1 month to the next, are we also seeing what we call well bid? Well bid is higher highs and higher lows. So that means now from 2 months in a row, last month, April, and now May finishing out on next week, we are now seeing prices follow through. So the deep pockets, the smart money, from 1 month to the next, held higher lows and paid higher prices. So again, why would somebody be paying higher prices in these stocks that I'm showing you right now? Because their research has told them that the cash flows the company's doing right now are worth more than what they could pay for them right now. That's what the earnings season numbers are telling us, what they did last quarter and the guidance going forward. Okay, so let's keep going through this list. I'm going to give you 2 different lists. One is by percentage and one is from the dollar amount. Okay, so again, you want to screenshot both of these. Okay. So a lot of them obviously on the energy side of things. There's not even a question about that. So let me actually bring you over to that list again. We want to break this down. So this is the sector rotation. You can see energy is at the top. One of the most awesome changes that we're having right now is looking at, let me actually bring these over to the main chart, is one of our favorite stocks that we've been getting involved with lately, which are some of my favorite stocks. I'll give you a little bit of a heads up on this. I love trading financial stocks. They have been absolutely in the dumpster for the better part of the last couple of years. JP Morgan, Morgan Stanley, were kind of going sideways. They're lighting up a little bit now. They're bullish gaps. They're holding the bid. They're seeing a little pressure. So I'm going to actually give you a quick list on that as well. So Citigroup, and you can see bullish gap, holding right near the breakout. Morgan Stanley, JP Morgan, Goldman Sachs, even Wells Fargo. Okay. Now, here's the thing. Are these just get in there and buy them tomorrow? No, they've already been going up 2 weeks in a row. You might want to wait a little bit. Remember, we talked about a push and a pause. If they're pushing up now, we need a pause, right? So let's actually break down Wells Fargo right now and just do a really quick deep dive, right? So we can actually see that this longer term picture is still pointing to the downside. This is just the first move to the upside. So what we'd end up doing is we end up drawing what we call a box at this price, and we'd be looking for the next pause above this level. So now the stock has already rallied from 40.50 to 45.60, which is not a huge move, but for this stock, it's actually a pretty decent one. So I want to keep going along the lines of the stocks that are in play here. So these are the stocks. Again, this is the raw list of stocks that showing order flow from a percentage basis for the month. This is a different list for the week, and this is for the last 10 days. Okay. So now let's actually get back into the platform. So this list, again, take a snapshot of it. When you go through them, Sava is one that's pretty interesting. You're now seeing it's close, but holding resistance. So this would need to get above this level, which actually brings me to another point. Stocks that meet the criteria don't necessarily mean they're a trade. If you could think about, you want to get as many good ideas as possible, then you need to go and say, are we near the optimal entry? Is there room to go? Is there profit target? Am I comfortable with the risk? So never forget this. And I think this is a big problem or just like one last hurdle that a lot of people need to get through. There's ideas that meet the scan. So I'm going to give you this again, if you want to take a snapshot of it. There's ideas that meet the scan, but then when you look into it, it's actually hitting a wall at a level that needs to get through. So for this particular stock, which is Sava, I'll actually pull that up on a different chart so it's a little bit easier to see. When I pull up Sava on that chart, you need to, hang on, I just actually closed that window. Close that window out by mistake. You need to know where the price levels are in order to do something. So the sellers keep coming in here. So I'd be looking at 28 as the next level. So we hit resistance, 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 resistance. So I like the push, I like the pause. I like the push, I like the pause, but you have resistance here and you have resistance here. So even though this one meets the criteria, I'd be waiting for it to get over 28. So what I want to do now, so again, this is going to be a different list. Make sure you snapshot this one. So I want to give you ideas for next week and heading into June. We'll actually head now over here and we're going to sort it by the month. This is percentage gain for the month. So you can see $10 stocks are in there. When we change this from dollar for the month, you're going to start to see a lot more expensive stocks because those dollar gains are going to be significantly different. So now you can see, look at the dollar amount of the stocks that have changed. And quite honestly, again, take a snapshot of this so you can get an idea of some of these stocks. You can see FANG, which has actually had a monstrous run. Look at the month, look at the week, look at the last 5 or 6 days. Eli Lilly has been exploding through new breakout levels. Chevron obviously doing the same thing. Look at this monthly candle, okay? So here's the thing, and here's a big suggestion from an active trader. Somebody's been doing this a while, right? It's important that you run your scans 2 different ways when you're looking for opportunities. Percentage gains will give you ideas that kind of takes out of the equation what the dollar cost of the stock is. Like you might see a stock like Hood, for example, where it's a $10 stock and it might run $2, but that's a giant percentage move. So you could trade a little bit more share size in those ideas. So those smaller, lower price stocks, if they meet your criteria, can still be traded because of that percentage move. But you also want to do a search on dollar moves because those are the bigger moves where you can capture wider profits. So as a suggestion, when you're doing your game planning, always run both. Do not run one or the other. Run both, because the way that we talk about it is you want to hit the ideas from different angles in order to find ideas that you won't uncover if you're kind of just doing the lazy kind of search. One other thing that was interesting last night, we ran a search on stocks that broke out and specifically stocks that broke out to new 20-day highs. And I really want to highlight this one because it's kind of important. So everybody knows that we use FinViz, right? One of the top scans that I run every day are the breakout scans. And you can see the breakout scans. I have it has to do a normal of 0.75% on a breakout. So these are stocks that actually broke out to new 20-day highs. And you'd be like, wow, that's pretty impressive. So that's what we're talking about. Are they actually turning around and starting to look for some opportunities? But here's one of the biggest things we started to pay attention to yesterday. A lot of these stocks that are rallying now 3, 4, 5 days in a row, the volume keeps dropping off a cliff. It's like way down here now. And you're like, who's buying? We actually had a big question about that in yesterday's coaching call as well. How are these stocks continuing to go up, even though volume keeps dropping every day? That's usually where you see reversals. So while it's impressive that we had 28 stocks that had new 20-day breakouts, I want to take this one step further. And again, I hope I'm inspiring you to think about your own game planning a little bit deeper. Okay. So you can see this was based on, let me actually zoom that in a little bit for you. You can see this was based on 3/4 of the normal volume, and that brought up 28 stocks. And that's impressive. and they also closed positive and they closed above the open. But I want to know how many stocks actually broke out and did more than average normal volume. And that's going to tell us how many of those breakouts really mattered. And we just went from 28 down to 2. If we take a look at those two stocks, you can actually see, again, this one broke out here. So GME, that'll probably be one of those more active trades. But LTHM has actually been in our list for a while. And this would actually be a two-step trade where we'd have the first piece here and we wouldn't add until we got above here. But what's actually more important than that? It's impressive if you're lazy and you don't go one step deeper. You're like, wow, 28 stocks broke out. That's pretty darn cool. But then you're like, well, how many stocks broke out on above average volume? So you know a part of what we do, which is tape reading, we're reading the tape and we're looking at the order flow. But how many people actually stepped up and spent money to push it through that level? We just went from 28 down to 2. That's a big drop. And only one of them was really a breakout. The other one just happened to be a new 20-day high. So think about this now. What does that tell you about the recent stock market rally? Probably doesn't have the teeth that you would think because we're in a bigger picture move to the downside. So what is the game plan for today and for these stocks that are having strong moves off the lows? That means we have to drop down and look at different order flow to take advantage of these bigger moves. But the bigger dollar move, the bigger expectation for over the next couple of weeks in these stocks that have bearish order flow would be we'd be looking for them to go down further because inflation hasn't changed. None of that has changed. All right. So now what I want to do is I want to take this a little bit further and do a little bit of a deeper dive into the stocks, the top 20 holdings, I believe, in the S&P 500. And now we could come to a conclusion. Has the bear market reversed or is this simply a bounce before we go down again? So this is actually going to be kind of cool. We can actually take a look over here and we're going to break it down. So you actually have a list over here of stocks in the S&P 500, and we're actually going to sort these. So this is just the top 20, 25 stocks. So our objective here is to make a distinction. So again, if you were in my trading office in New York City, we'd be having these conversations over coffee in the morning. We'd go down to 35th Street and having a bagel and coffee, coming back to the office, and we go chart by chart by chart and get, okay, what is the feel that we have for the market? Now that we have an idea, what is the feel? So we're going to the biggest holdings in the S&P 500. And if you ask why, because these are the ones that push around the indexes. So it only makes sense for us to say, let's go pay attention to the stocks that move the indexes, because if we're good at reading the market and these stocks are the dominant ones that move the S&P 500, it's probably a pretty good idea to go over to them and say, hey, what are you guys doing? This is a part of game planning. So again, let's take a look at these and we're going to watch and get an opinion. So Tesla, even though it was up a lot yesterday, still clearly pointing to the downside. NVIDIA, up yesterday, still pointing to the downside. Meta Platforms, absolutely nothing going on here. Amazon, still pointing to the downside and actually in a 3 or 4 week trading range. Broadcom, good news yesterday. They actually had completed the buyout yesterday. But is there an edge here? Can you look at the stock right now and say, you know what, in the big picture, buyers or sellers are definitely in charge? The answer is absolutely no. So what are we doing right now? We are getting a deeper level of conviction in whether or not we want to be a buyer or a seller today. So Broadcom is actually a good example because yesterday, very similar to NVIDIA, we had a vicious move to the upside. But that vicious move to the upside had this bigger picture push to the downside or best case scenario sideways. So we can't look at this stock right now and say buyers or sellers are paying more over time. They just paid more yesterday. So if they're only buying yesterday, then that stands to reason that we should only be looking at the current price action, which is yesterday. And that's a part of reading the tape. So let's continue to go through the stocks in the S&P here and determine whether or not there's bigger picture buying pressure. So Home Depot, no. Apple, no. Bank of America, no. Visa, no. It's stuck in a range. Disney, looks like it's going to touch down to 100 today. Cisco, no. This is actually a bear flag I'm looking to short sale today. Google, no. JP Morgan, kind of maybe it's coming off the bottom, but still pointing to the downside. MasterCard, no. Microsoft, no. Berkshire Hathaway, no. PG, bearish. UNH, bearish. All right, Chevron. So what did we just do? Right? What did we just do? We just woke up and said, okay, all of these other stocks in the S&P 500, bearish, selling. So we're only trading momentum to the upside for cash flow. But now all of a sudden, Chevron woke up. Should that shock us? No, we gave you the list of sector rotation before, and energy is at the top. So most of the bullish ideas that we're looking at right now are healthcare stocks and energy stocks. That's been the top two list of stocks that we've been going to. So out of all of the stocks we just looked at, the top holdings in the S&P 500, Chevron, as of right now, is the only one that's breaking out. Well, Pfizer, pretty good news lately, but it's got to get through this 55 level. Coke, consumer staples, kind of holding the bid in there. ExxonMobil, again, another energy stock breaking out. J&J, another healthcare stock showing relative strength. ABBV, nothing. So we just looked at roughly 25 of the top holdings in the S&P 500. Can anybody look at that right now and say the bear market has reversed and now it's time to have a party and start buying with two hands? No, absolutely not. However, the earnings plays have been good. I just taught you today on how to look at those on shorter time frames. Again, though, finding the ideas and making money, not the same exact thing. So again, if you're having a problem right now with finding ideas and getting paid, I strongly encourage you to click the link below the video. Our next boot camp starts next Tuesday. It's 14 days. It's only $195. Got a bunch of people in the boot camp right now, or have been in the boot camp. I know Scott and a few other people. Invest in yourself. It's $195. You get probably about 30 hours of coaching from me, plus all my ideas during the day. I'm only telling you this if you're not getting the results you want now. If you feel like you know everything, but you just can't turn the corner, that's the point of us spending 14 days together, because you get this from me every day. Now, what we just talked about, and again, we just went through a bunch of stocks that dominate the S&P 500. We just came to the conclusion that, yeah, we're having a move up the lows where we're probably going to break that 7-week move to the downside, finish positive this week. But it's the first sign of a potential reversal, and the dominant stocks in the S&P 500 are still pointing down. So that means that right now we're kind of in a potential change of trend, which is usually where money goes to die, because you don't know if it's over. You don't know if a new move is starting. So what does that mean for trade management? Trade management means unless a stock is clearly in a direct order flow, like we saw in some of these energy stocks that have been breaking out. Now, again, a lot of the energy stocks, let's put this in context, have broken out after already gone 6, 7, 8 days in a row. So those might be a little bit too far for a new swing trade, but they need to be on your watch list. But the key here is if you're trading with order flow, whether it's a short sale or a buying opportunity, those are the trades that you can hold a little bit longer because you're trading with the dominant force. If you are trading these rallies against longer term selling, those are what you would call cash flow trades. Maybe lower your position size a little bit, and when it moves up in your favor, you'll be a little bit more aggressive with getting out and booking some of those profits, because it's a long-term move down and a short-term move up. These little trade management things are what separate you from, yeah, I love trading, I can't wait for Monday, to, oh man, I can't make any money. Trading is frustrating. It's these little distinctions. So what I want to do now is I want to just show you the coaching call from yesterday. I just want to give you an idea of what we talk about during our coaching call session. So I'm going to pull this in here, and I want you to see all the stuff. So again, just to give you an idea, these are all the things that happen during the 2-week boot camp that we have. But I want to walk you way down to here for last night's coaching session. So you can see it was about 90 minutes. I just want to give you can take a snapshot of all the topics that we're talking about. Some of the things are mindset stuff, how to make custom scripts, improving your focus. This is a big part of what we just talked about now. When do I take partial exits, and when do I hang on for a bigger move? What's the stop loss when you add shares? And these are questions from John Oakes. I know John Oakes is here today. When do you try and switch from your initial profit target to hold bigger trades longer? So you can see there's a bunch of good questions in here. And then we finished up with something really strong, which is my specialty, actually, which is reading the market and taking advantage of sector rotation. So hopefully you took a snapshot of that. And again, we give you these on Friday to give you inspiration for the weekend, especially now we have a long 3-day weekend to level up and start taking control over whether or not you make money. So look, our boot camp starts next week. This is just a small sample of what you get. I know there's a lot of people in here who've been in the boot camp with me. This is just a tiny sample. I will challenge you. I did it on last night. Somebody asked a question. I said, you are not working hard enough. You're not trying hard enough. I want you to level up. I want to scare you out of your comfort zone, because you're here. You're putting in the time. You're asking questions, but stop saying, I can't. Start imagining what it looks like if you take the right action as a professional trader, and what the potential is if you finally get out of your own way create an edge, and start to follow that edge, and then actually learn how to make money. That's what's exciting about trading. So if you're having a hard time right now, the market is giving you feedback that what you're doing is not working and you need something different. Look, I'll give you my edge. Just join the boot camp and you get everything. You keep the course, stacking the order flow for a lifetime. Just a question of whether or not you want to invest in yourself or continue to do what's going on right now. So hopefully these questions inspired you a little bit. Hopefully now you understand a little bit of how to take advantage of the big move versus the big move to the downside. And more importantly, we did that deep dive into the stocks in the S&P 500, and we came to the conclusion we're rallying now, but most of those dominant stocks are still pointing to the downside. So we're not calling a bottom yet. It's just taking advantage of these short-term moves to the upside. All right. And actually, we're going to finish this up with Jason. Jason's been in our community. There's somebody who's been in our community for a while, and I just can't express how grateful I am to people that come in and invest in themselves and being there with us. So let's have an awesome day of trading. Let's finish it up. Have a great, profitable day heading into the weekend. Watch the next video up here. I promise it'll be worth your time. Have an awesome day, everybody. I'll speak to you soon.